Welcome to the Buyer's Consultation presented by myself, Cornelius L. Jackson, and the topic, are you ready to be a homeowner? Let's go over the Buyer's Consultation. Here's my contact information, my cell phone number. Feel free to reach out to me, 949-427-3883, or you can email me, cljrealty@gmail.com. My mobile business card is my name, corneliusjackson.com. So feel free to reach out to me with any questions that you have after reviewing this buyer's consultation, and I'll answer any other questions that you have that may come up from this. But once again, welcome to the buyer's consultation. Let's get started. So I want to go a little bit about my background. So I'm not just we're not just total strangers. At least you know a little bit of who I am. This is the personal portion of who I am. Born in Louisiana, was raised in San Diego, California. I actually opened my real estate office in Irvine, California. So we're based out of Irvine. Been married to my lovely wife, Jessica Jackson, since August 1st, 2017. And I'll tell you a crazy story about that. We have 4 kids, 2 are twins, our lovely twins there. Need to running around and causing terror, but they're doing their job. And I'm proud to announce I'm also a 4th Dan Taekwondo master. It's something that it took me almost 20 years to achieve. So very proud of having my 4th Dan black belt in Taekwondo, Kukiwan certified. And I'm a retired federal law enforcement officer, worked at the federal prison about 7 years. Before I retired and decided to do real estate full time. And a funny story I have is I know I was, before me and my wife got married, we were actually driving to the wedding venue. We were at a red light, it turned green, and for some reason I didn't go. I just waited about 5 seconds. A car runs the light going 90 miles an hour. My life flashed in front of my eyes, and I told my fiance at the time, I said, you know what? Let's just go get married tomorrow, and I'm never going to work again. I'm just doing real estate full time, never going to walk inside of a prison again. And that's what we did. So 8/1/17 was the very next day. We went, got married, and we had a wedding that was scheduled prior already, but we got married the next day. So that was a little story of myself and what happened, of how life can change, all for the good. Now, a little bit about my real estate career. I received my real estate license in 2007. In 2016, I opened up my own real estate brokerage, CLJ Realty Group. And one thing I really like to point out is from 2007 and 2014, I only sold 2 houses. And I sold both of those houses in the same month. So that was a long 7-year career, or 7 years of my career, but I never gave up, which hence in 2016, I was able to open my own office. 2019, I was actually featured in the top 100 magazine of real estate. And what I don't have on here is in 2018, I did my career best of 32 million in real estate transactions. So that was one thing that helped me get featured in the top 100 magazine. In 2017, one of our real estate agents was featured in Car magazine for 30 under 30 for her production and her work under my leadership within my brokerage. And now it's 2020. So I received my GIL certification, which is $1 million marketing broker certification for pretty much the amount of production I've done in the $1 million space, helping successful entrepreneurs as far as sell $1 million plus properties and purchase over $2 million of different properties throughout Southern California. And I partnered with eXp Realty in 2020 as well. Now, going into why, one reason we partner with eXp Realty is their global footprint. They open up Mexico this week. Canada is open. The UK is open. Portugal is open. They're working on France. India, they're working on. South Africa actually just opened last week. Australia is open. So if you're watching this and you're looking to purchase real estate in any of these countries, I can help you. Anybody on my team, we can help you. And granted, we're in all 50 50 US states, where if any other state you want to move to, we can help you and still service your real estate goals as well. Now let's go over the buyer's roadmap real quick. So number one, the first thing you do is you meet with a real estate professional. The second part is that real estate professional refers you to their lender of choice, where you get your pre-approval, or you may have your own lender. And then the third step, you start searching for homes. The fourth step, you make an offer on homes. And the fifth phase, you're in negotiations, doing contract. The sixth stage, you're under contract or in escrow. Then we cover the final details, eventually to being sold and closing, getting your keys. That's where everybody's happy. You pick up your partner, you walk through the door, and life is on to the next chapter at that point. So we're going to go over these phases and what they expect within all these phases. That's really what you're going to learn in this consultation here. So are you ready to buy? Let's get this. So the first thing you need is steady income. You need proof of employment. You have to have a low to medium debt, cash for down payment or closing costs, 2 months of pay stubs, and 2 months of bank statements. That's what you're going to have to provide to your loan officer or mortgage broker that you're working with. And you have to be 2 years with the same company or inside the same industry. So for example, I used to work at the federal prison. So let's just say how I originally worked at a contract prison, which is GO or CCA. It's still working with inmates. Then I got hired with the Bureau of Prisons. Now I went from contract to federal, but it's still within the same field. Or if you're a nurse and you just switch from Kaiser to Sharp Hospital, as long as you have the same job title or within the same field, it still works. It's the same thing. Then you have to have 2 years of tax returns. If you have not filed your taxes and you do not have your last 2 years, it will not work. You need to file your last 2 years of taxes in order to get approved to purchase a home. And as of right now, you need a 640 plus middle FICO credit score. That's where it's at right now, 640 pre-COVID or coronavirus. 580, you could get approved FHA loan. As of now, you need a 640 credit score, 640 middle credit score. There's still some lenders that could probably do it at 620, but I'll tell you your interest rate is going to be 2-3 times higher than what you see that they advertise that's out there. So just shoot for the 640, but if you're over 680, you'll get premier rates as far as your interest rate goes. Now, the types of loan qualifications. So here's the first one, a pre-qualification letter. Anyone can say, and it holds no weight nor value. So let's just say you have your pre-approval from your lender and you're talking to a coworker. You're like, okay, you know what? We have the same job. I know they make $80,000 a year because I make $80,000. They said they have $20,000 saved up and they said they have a 650 credit score. Based on your knowledge, and based on what you had to do to get pre-approved, you got pre-approved. So you could tell them, hey, you're pre-qualified. But in reality, it holds no weight. This is why. Now, the pre-approval, the lender, they're going to review your documents, your last 2 paycheck stubs, your last 2 bank statements, your tax returns. Once they get all that information, then they can issue you a pre-approval letter because they looked at your documentation, and based on your documentation, you were pre-approved based on that lender's standards. So that's why the pre-qualification doesn't hold any weight, because no real documentation has been looked at. There's no telling where they might be a business owner and they took a loss. So therefore, even though they make $80,000 income at their job, if they took a $40,000 loss on their business, their income is now $40,000. So the pre-approval, once your lender views all your paperwork, that's where all the weight is held at that point. Now, this is the main one you want, which is called a DU loan approval. That it basically means a desktop underwritten loan approval. All loans must receive this before closing escrow. All loans must receive this before closing escrow. So our preferred partners that we use in the mortgage industry, they know how our office likes to work. We like to have our clients receive the DU loan approval, desktop underwritten approval. So therefore, when we're out looking for homes, we're submitting offers, your offer is just as good as cash, where it has the DU approval, it has your credit score, and everything is done. So when we're in escrow and you have a DU loan approval, as long as you don't go out and buy a car or run out 10,000 in debt or even 5,000 in debt, depending on your debt to income ratio, like that loan is 100% secured and it's going to be closed. So we definitely like to get the DU loan approval. If you don't have it up front, just know before you close escrow, it always goes through the desktop underwritten process to get the DU approval. Some may have to use a manual approval process because it doesn't just spit it out because you are a business owner. So somebody had to manually put your information in there. So that's how the DU loan approval works. So that's the one you really want. So you can really compete with cash offers. Granted, it's not cash. Cash can close in 7, 14, 21 days. As a loan, it takes 30 days. The earliest I've seen it done, 21 days. But no reason to put that added pressure on your loan officer. We can just leave it at 30 days. Now, there's a couple of different types of loans. The first one is an FHA loan. So the minimum down payment for an FHA loan is 3.5% down payment if your credit score is 580 or higher. Granted, this consultation was pre-COVID. I do know they will go back down to the 580 approval rate. It's just a matter of when. So I'm not going to change it. I'm leaving it at 580. But as of right now, December 2020, 640 credit score and above is what you need. But eventually it'll go back down to 580 credit score to get you approved. Otherwise, some other programs with an FHA loan, with a 500 to 579 credit score, if you have 10% down, you can get approved. Granted, pre-COVID, I'm sure there's still some lenders out there that if your score is under 580, you put 10% down. I'm almost positive they can make it work. I don't know what your interest rate's going to look like, 5, 6s, but if that was a house you had to buy, that your grandmother grew up in that house or you grew up in that house and there was sentimental value behind it, I understand it. Otherwise, if that's not the case, wait until you're 640 and above. Now, your debt to income ratio has to be 48% or less. The house must be your primary residence and must meet the FHA's minimum property requirements. Now, the property requirements, once your offer is accepted, we go through the escrow process. The appraiser is going to come out. That's the person that's going to determine if it's approved to FHA guidelines. Now let's go over the FHA 203K repair loan. Same as above, but the home must appraise for the value after the rehab is complete. So here's an example. A home costs $300,000 and you have $40,000 worth of rehab. So it means the house has to appraise for $340,000 in order for you to do the FHA 203K repair loan. Like if the repairs were only going to cost $20,000, the home would have to appraise for $320,000 if that's what the repairs were going to be. So that's how you buy a fix and flip using a loan, is the FHA 203K repair loan. Now the conventional loan, standard industry is 5% down. There's a huge myth out there. People think conventional loans are all 20%, but they go as low as 5%. I even know a couple of lenders that will go down to 3% on a conventional loan if you have like a 700 credit score. They're able to get you a lower down payment. Now for condos, 95% of condos will be conventional loan only. Now the reason of that is because 50%, well, more than 50% of people that live in the condo community are renters. In order for a condo community to be FHA qualified, more than 50% has to be owner occupied. But because most condo communities are renters or turn into investments for a lot of other owners, it's only conventional loans that you can use to purchase it. If the property needs repairs, this is the best loan of choice, is the conventional loan. Now, the VA loan, the house must be your primary residence and must meet the FHA's minimum property requirements. VA is exactly the same. It's backed by the government. So they pretty much insure the loan. Now, there's zero down payment on a VA loan. And the credit score is 580 minimum on VA loan. I do know now, in the midst of coronavirus, it's about 600 credit score is what the lenders like to look for, but some can still do it at 580. Now, here's a big one. All loan options must put 1% of the purchase price as earnest money deposit in the escrow within 3 days of getting your offer accepted. Even VA. So VA loan is known for no money down towards your loan. But if they accept your offer, you still have to put 1% of the purchase price. So if the house costs $300,000, you will put $3,000 down. If the house is $500,000, you will put $5,000 down. Now that is what's called your earnest money deposit, showing good faith that you're going to go through with the transaction. And I'll touch on that in the next coming slides. Now, one thing I like to do with my clients is establish a target date. Not many agents do this, but this is part of the system that I run. Is I like to figure out what's your target date so I can know how I'm going to follow up and stay in contact with you. So for example, if you're an A type of buyer, you're looking to move within 60 days, expect a daily email of listings, expect a call or text daily, because the goal is I'm trying to get you to your 60-day mark. So I've had people, they're like, look, hey, Cornelius, you're calling me too much. No disrespect. Cool, I understand, but I have you labeled as an A buyer, and I want to help you reach your target date of 60 days within that 60-day period of purchasing a home. Escrow is 30, so we're working hard to find the house, write the contract, get you an escrow. So we're doing all of our stuff on the background. But let's just say if that's the case where we're calling you too much, then I would tell you, okay, look, you need to move back to a B buyer. Let's move your target date outside the 60-day range. And once we do that, now you can expect listing updates weekly and expect a call or text once a week, opposed to having us call or text you daily, because we want to make sure you keep us accountable. You know what our job and what our accountability is to yourself. You can kind of know, hey, they're supposed to call us every day. We didn't receive a text or we didn't receive a call. Let me follow up and see what's going on, or unless nothing's happening. So that's kind of where we're at here. So A buyer, you're going to get a text or a call daily, but you'll receive listing updates daily. A B buyer, you'll receive listing updates weekly, and you'll get a call or text weekly. Now, there's 5 types of inventory that I would like to touch on. Drink some coffee for a second. Okay. Whether you're buying a single family home, condo, townhouse, land, or mobile home, they will always fall under one of the 5 below. Now, one of them is a short sale. And basically a short sale means that the owner is upside down on their mortgage. So therefore they can accept your offer if they decide to sell the house. However, the bank has to approve that offer because they're trying to have you purchase the house for less than what they owe. So the bank has to sign off that they're willing to lose 30, 40, 50, or 60,000. Sometimes the bank doesn't do that. And they would rather let the owner lose the property so they could take the asset and they could profit on the whole asset opposed to taking the loss. Or there's REO, which is real estate owned, or bank-owned properties. They're going to be more on the market come 2021, but there's a huge misconception. So it's not like in 07, 08, where the REO bank-owned market, they were just throwing properties on the market, selling them, not doing anything to them. Nowadays, the banks are rehabbing these properties. So they're selling them almost as if it's a fix and flip property where it may not have the best items there, but it's going to be clean and make sure to pass FHA and VA guidelines. So the banks are really moving their property to be standard listings to make sure that they're selling at market value. When you have your standard listings out there, it's your normal buyer or I'm sorry, your normal seller that's just selling their house. That's what we call a standard listing. Then you have your fix and flips. Many investors purchase properties, they upgrade it, and they want to flip it for a profit. There's nothing wrong with that. I just always tell my clients to make sure you write down your pros and cons list. And if there's a standard home you have to compare it to, and the fix and flip, if it has everything you want, it might just make sense to go that route because it's almost comparable to a brand new home, except you may be able to get in the location you want with a fix and flip opposed to a new home sales. One thing I really touch on new home sales is you don't want to go in and say, give me all the upgrades, the hardwood flooring, the granite countertops, stainless steel appliances, because in reality, all of those extra upgrades, you're paying for it over 30 years. So you end up paying 5, 8 times more opposed to just getting your house standard, paying for it outside of escrow. You're going to save a lot of money in the long run. A good real estate professional will advise you of that when it goes towards buying a new home sale. Now let's talk about search tools. So one, our agent search. So agents, every agent, they have access to the MLS. Some agents have larger agent networks or social networks, and then our off-market search list. That's one thing I pride myself in. Our team, we have a couple of bank-owned contracts, so we hear about a couple of properties or a nice amount of properties before they hit the market. So we're able to give our buyers a winning hand, a heads up that, hey, this is what's coming down the pipeline, so you can be prepared for it. And then our agent network and our brokerage, there's almost 40,000 agents. So we have a huge agent network, and our social network is, all 40,000 agents times however many friends they have or whatever other social groups they're in. So we have a huge network that we work with. Now, most customers, they're going to look on our website or one of the other public websites out there. You will see yard signs. There's no open houses right now, but there might be some model homes, some new builders. A friend might tell you, or you might see it for sale by owner. Now, this is one thing that we do for our clients at COJ Realty Group. We have a target search set up. So once we find out the areas that you're looking to purchase in, we're going to look at the pre-foreclosures in that area. We're going to go through our database with the banks we have accounts with to see if there's any pre-foreclosures coming up. We're going to go to our title professional. We're going to run the pre-foreclosure report for that neighborhood tract that you're really looking to get in to see what we can find. We're going to do circle prospecting mailing lists. So let's just say if somebody just sold in that area that you really want to get a house in, we're going to search the neighborhood to see if somebody else is willing to sell, because we have a DU, desktop underwritten approved buyer that's looking to buy in that neighborhood. And then you hired us to be your real estate agent. We're going to look at the for sale by owners in the area to see if that home may fit your need. And one thing we do is go above and beyond. We're going to reach out to that seller. We're going to ask to schedule a private party showing where the agent, myself, or whoever sent you this video, your agent on my team, they're going to go there. They're actually going to do a video tour of the house with the seller there, and they're going to send it to you. And if it's something you like, then we'll set up a private showing. There's no reason to waste our buyers' time on a property that they may not like. Then we search the expired listings, where we're going to look and see if something expired off the market for some reason or another. It could be price, or it just wasn't the right timing for the seller, to see if it's a match for one of our buyers. We pull a divorce list and see if somebody's getting divorced, they have to sell, and we may be able to make a match for our buyers that way. And then we also do a probate search. So our team, once a month, we go to the courthouse, we go through the court records, and we look at the probate sales that are coming up, and we try to identify what areas that our buyers are actively searching in, if we can put a match together. So that's what we do here at COJ Realty Group as far as our target search for our buyers to actually hire us. That's what we do behind the scenes to try to find you off-market properties, because we want to bring you as many properties as possible. Now, your home search, a home that the buyer driven by and wants to set an appointment to view. So that's one thing we do is we want to make sure the home is meaningful, Meaning we always ask you, hey, drive by the neighborhood, make sure you feel good in the neighborhood, drive by the grocery store, make sure like you feel you can go to that grocery store at night, or it's safe for your mom to be there, or your kids can walk down the street, drive by the park, experience the neighborhood. And that way you'll get a feel if you want to move to that neighborhood or really want to see that house. So that's one thing that we encourage our clients to do. And let's talk about some of the features of the home. Okay, location, what's the actual price range? Is there a certain square footage that you want? The schools, is there a certain school district you have to be in? How many baths, the style of the house, how many bedrooms, the features, like does it have quartz countertop, granite countertop, hardwood flooring? Do you want carpet? You have a large backyard? Is it fully fenced? There's so many different features. So as we go through the course and we do your intake form, we're going to gather all this information for you so we can make sure we're sending you the best properties or the most meaningful homes to you and your family and your home search to not waste your time. Now let's get into making an offer. One, I always tell people, you don't want to fall in love with the home, but you will. You will. I did it. So trust me, I totally understand. One thing I'm going to do is double check with the seller. I got to figure out what they want. I want to see their earnest money requirements. Granted, the bare minimum, 1%. However, some people, they'll respond back and say they want 3% earnest money deposit, or they want 10,000 earnest money deposit. If they were in escrow before, they fell out of escrow, they're going to say, hey, you know what? We fell out of escrow. This is what we want. So it happens. It's part of the course of doing business. Or your down payment or finance amount. Do you need closing costs? Like I have to know all this prior to me contacting the listing agent, so that way I can figure out the details of how to structure your deal prior to talking to you, so I can guide you down the path of getting your offer accepted. Some important dates, the seller may need a 5-day or 14-day rent back. They may want a 45-day escrow, a 60-day escrow. These are all important information that I have to get, or your agent has to get prior to you submitting your offer, to make sure you have the best chance of getting your offer accepted. And then your offer will be either accepted, counter offer, or declined. And if they don't respond, it means they declined your offer. They can legally, they don't have to respond. So I always tell people, just because you submit an offer doesn't mean they have to reply back. Okay, now when your offer is accepted, this is when life is good. We're opening escrow, shaking hands, feeling good. Now the real work begins. Okay, so you have to wire your earnest money deposit to escrow within 3 days. That's that 1% I told you about, unless the seller wants 10,000 or 3%, unless it's a different number, but otherwise it's 1%. Now, your inspection and repairs must be completed within 17 days. So that 1%, your earnest money deposit, you have 17 days to cancel escrow and get 100% of your money back. So as long as we do our home inspection, if there's any repairs we want to request, it has to be done within 17 days. If the seller decides they don't want to do it, you can decide to cancel, get all your money back, or continue to move forward. It's the same thing with the appraisal. The appraisal has to be done within 17 days. If the home doesn't appraise, let's just say you got an escrow at 700,000 and the home appraised for 680. And the seller's like, I want 700,000. It means you have to pay 20,000 difference to get the home. And if you're not willing to pay the 20,000 or don't have the means, we fall out of escrow, you get 100% of your money back. But, on normal occasions, the seller will just say, okay, the house is worth 680. They're going to sell it to you at 680, or try to have you meet in the middle where they say, okay, you know what? It's worth 680. We accepted your offer at 700. At least meet us in the middle at 690. Now, if you have the means to pay the 10,000 difference, we can continue with escrow and move on to the next phase. If not, we would just cancel escrow. And once again, you get your whole 100% deposit back. Now, your home insurance. I don't know why home insurance is right there, but it's something that is going to be paid. Your first year of home insurance is going to be paid up. through the escrow process. So I always tell people, as far as home insurance, whoever your car insurance is with, you want to go there first for a quote. And then outside of that place, always check with either AAA or Geico as a secondary backup. Now we're going to finalize your mortgage details. So you have 21 days for your lender to say you have your clear to close. They ran it through the DU, Desktop Underwritten Approval program again, and you've gotten your full clear to close escrow. You have 21 days to do that. So if you don't get that in 21 days, basically mean you can cancel the contract saying you didn't get your loan approved, you get your deposit money back. So you're covered there. So as a buyer, you're technically in control for 21 days. Now, depending on the offer, these dates can be countered down to 10 days, 14 days. It could be no appraisal contingency. That's why you really want to make sure you get with a real estate professional that's going to guide you down the right path to let you know if you remove the appraisal contingency, this is what you're up against. Now we got to do a final walkthrough before we close escrow. This generally happens 3 to 5 days before you close escrow. You want to make sure the house is in the same condition it was when you first saw it and you submitted an offer. Now let's go over closing costs. These are the items that's normally included in the closing cost estimate. As a real estate professional, what I tell my team to do is you want to use 2% of the purchase price as your closing cost. Your closing costs should never reach 2%. They're realistically going to be, anywhere from 1.6 to 1.8%. But we use 2% because it's not going to reach over 2%. Some cases it could, depending on if you were buying points to get your rate down. But outside that, it shouldn't reach 2%. But, your processing fee, underwritten fee, lender fee, loan discount fee, recording fee, settlement officer fee, which is escrow officer, title insurance, escrow taxes, insurance, prepaid insurance, credit report, transfer tax, attorney, notary fee, document preparation fee. All of these fees are in your closing costs. So yes, you have your earnest money deposit you put down, which will apply towards your closing costs. Then you have to put your money down on your loan. So that's how that works as far as your closing costs. There's a lot of down payments, but every situation is different. Make sure to reach out to me or whoever your actual agent is that you hire to be able to break down 2% and what your lender is requiring, whether it's 5% conventional or 3.5% FHA, or if you're VA with no money down. Now, here's the big day. We're talking about loan signing day. Yes, we went through all this to get to this day. This is the big day. Myself or somebody on my team, but if I'm directly working with you, I'll be there. Your lender will be there. But if your lender's in another state, your lender won't be there. So it'll be myself and escrow, or maybe you're at work, or maybe you're at home, and we have to send a notary to you. So it might be you and the notary if you're at work, or depend on where you live, where you're at in the country. If I'm not in your state, I won't be there. It'll be you and the notary. But what's going to happen is I will be able to receive a copy of your paperwork so I can review it to make sure everything is right. Everything that the lender said is going to be on your contract, and that's what's in there before you sign. Now, bring your identification card. Everyone who is purchasing the property must be present. If this is not possible, let escrow know in advance. They can send a notary, or they can change the time to where everybody's present and they all have to have their identification. You'll need to bring a certified check, but I tell people instead of the certified check, it's best to do a wire, like go to your bank and wire it directly to escrow so the money is there. And you will pretty much be wiring your down payment and the rest of your closing costs. So prior to you signing the documents, escrow or your loan officer will contact you and let you know the total that is left for your closing costs and to put down on your loan. They're going to say $12,562 is what you have to put down, or whatever your number may be to the exact T. Then after that, after you sign the docs, In some situations here in Southern California, there's some counties that we have where we do special recording. If you sign the docs early in the morning, if your lender table funds, meaning you sign the docs early in the morning, escrow faxes them a copy of the docs, then they'll overnight it to them, but your lender will table fund that morning and you could close that day because certain counties do special recording. If your county doesn't do special recording, depending on where you're looking to purchase at, then what will happen is you'll close escrow the next day. But generally, you'll sign loan docs, and within 72 hours, you'll close escrow unless there was another date agreed upon. Now, what is next from here? That was a lot of information. So what's next? PED form to sign, which stands for Coronavirus Property Entry Advisory and Declaration Visitor Release Form. We're in the age of coronavirus, COVID-19. So this form has to be filled out on every single property you want to view. Now, as your real estate professional, what I'm going to do and what my team is going to do, we're going to see this form one time. We're not going to put an address on it and we're not going to date it. Because whenever you want to view a home, we have what we like to call our master copy, where we'll put the address on there and we'll date it. So therefore, we'll be the only ones filling out the form 10, 12, 14 times, and you only did it once. And then the second form we're going to send you is our buyer broker agreement to hire our firm. In this form, there's 35 agents in my office, our branch office out of Irvine, California. If I can't meet you to show you a house, then one of those 35 agents will meet you at that house or other houses you want to see to view the house. Now, let's just say, for example, you decide, okay, I'm not buying in Southern California, I want to buy in San Francisco, or say I want to buy in Arizona, or you know what, we decide to move to Texas. By you hiring us and signing our buyer broker agreement, once again, with our brokerage, we're in all 50 states. We can refer you to one of our partners in Texas, San Francisco, New Mexico, wherever you want to go, Mexico, we can refer you down there. And that agent will be the forefront on the ground and doing the negotiations for that state, but we're still tied to that transaction to be able to help you, be able to talk to that agent, and just be your confidant to make sure they're taking care of you in our absence because we're not licensed in that particular state. So that's what the buyer broker agreement does. You're hiring myself, our 35 agents in our office, and getting tied in with the 35, 40,000 agents we have nationwide. Then we're going to set you up on your custom search. And then from there, we're going to look forward to giving you your keys and come to closing day. So I appreciate you. Thank you for your time, for watching this video. I will be sending you now the coronavirus addendum, and I will also be sending you the buyer broker agreement. Once you sign those, your custom search will be set up. Once you identify some properties you want to view on our website and you saved it as a favorite, it's going to prompt myself, your agent, or somebody in my office to contact the listing agent, see the showing details and the private details, and then we'll contact you and see what dates you want to go out and view, and we'll just schedule from there. Now, once again, here's my contact information: cell phone number 949-427-3883, or you can email me, cljrealty@gmail.com. Once again, my mobile website, corneliusjackson.com. I appreciate your time. Feel free to text me, call, email if you have any questions going over this overview. If you want to do a one-on-one